Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
11,155, 160 is the opening.
It tells me maybe this thing's a little worse than we're thinking for them to make such a joint statement.
We've breached, I think, that 11,000 odd mark on an intraday basis, so that's pretty important. A lot of stocks that were holding in the green, now they've taken a U-turn.
There is no recovery of any meaningful size. We're still down 160 points on the Nifty.
NBFC and financials universe, deep cuts on the likes of Canfin Homes, down 8.5%. There's been about a 9% drop on PNB Housing.
Double whammy for Dalal Street. Global headwinds and debt market concerns weigh on investor sentiment. Sensex loses over 500 points. Nifty ends below 11,000, falling for the fifth straight day.
The Reserve Bank of India and SEBI try to talk up the markets, but NBFCs continue to fall. Fear of higher cost of funds grips the sector.
Crude oil prices surge on restricted Iranian exports and tightening global supply. Brent and NYMEX hit their highest level in 4 years.
The rupee remains under pressure as it continues to weaken due to strong dollar demand. IT stocks rise, and it is the only patch of green on the screen today.
Auto stocks suffer major losses. Nifty auto index ends the day 4% in the red. Expensive fuel, higher EMIs, and a higher cost of upfront insurance spook sentiment. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today, the fear factor. Clearly, fear has gripped Dalal Street, and that's why the fall for 5 straight days. And a couple of those days, the fall was over 1%. For the Sensex itself, in numerical terms, a fall of nearly 500 points in 2 consecutive days. Well, this is the show where we tell you all about all those 6 hours of rather terrifying market moves in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair.
Lata, hi. As Lata pointed out, over the next 30 minutes, we will, of course, tell you what happened in the market. We'll take your questions as well. I'm sure our viewers have lots of questions with regards to sector, stocks, so we'll help you out. Our experts will help you out with those. Rajat Rajgaria of Motilal Oswal is with us. Deepan Mehta, member BSE and NSE, is with us. We have Ashwini Gujral, expert on the charts, with us as well. Gentlemen, thanks very much, all of you, for being with us here on the show. Before we start the Q&A session and get your questions to the experts, let's quickly rewind the clock back a couple of hours, more than a few hours, and play it in forward motion what really happened. Because by close, the Nifty was on 170 points. Lata.
Well, the macros are bad. Crude higher and rupee lower translates to higher expenses for everything Indian, especially fuel. Now, the debt markets were calm. But remember, it is these macros that get translated into the debt market. As you move in and see higher price of fuel and the global scenario where the cost of capital is rising, that's what the debt market was telling you, that you have to pay more for funds. And the guys who are getting it in the neck were the NBFCs. No trades happened, but that was the point. Markets remain wary of extending more funds to NBFCs. Whether or not anything happened today, the fear is that NBFCs in future will find it difficult to raise IPO money through debenture sale to mutual funds, and that fear continued to cut down NBFC prices. Adding to that list today was also auto stocks, what with the petrol price in Mumbai touching 90 rupees and crude price touching $80. I mean, that was enough for these big numbers always trigger a bit of, scare. And auto stocks got it, iShares, M&M. But why don't you take us through that list? Stocks that got it in the neck.
Where do I start? But to begin with, the indices themselves completely crushed. I think that's the word to use. So the Nifty, mid-cap index, Bank Nifty, everything losing big time. Such a sharp contrast to Friday's close, because by close, it was a very honorable close on Friday after all that we saw. And Friday was really something. A session I think people will remember for a long time. And the close was decent. And then till about 11, our mark, nothing really happened. Things were okay. And all hell broke loose post about 11:30, and the market sort of nosedived. All sectors except technology were in the red. The top losers were the real estate sector, auto index, and the PSU bank sector. Big cuts seen in stocks like Aisha, Mahindra & Mahindra. We had names like HDFC, IndusInd Bank, Aurobindo, Adani Ports, just to name a few. Come to NBFCs now. I mean, it's a long list, but Edelweiss, L&T Finance, Chola, Indiabulls Housing, Bajaj Finance. I mean, so I think the thing which is happening is that, you know, the AAA, the AA, the BB, everything essentially is being lumped together. And that is what happens when a sort of panic and fear kind of sets in. Muthoot, Shriram City, Capital First, M&M Finance, all kinds of names. I mean, HFCs, NBFCs, consumer lenders, they all got sort of hit in the chin. Other big cuts, REC, and these are all part of the F&O as well. REC, Idea, Piramal Enterprises by close was down about 9%. Motherson Sumi, RBL Bank, DLF was down big time. You had NCC, CESC, PNB, which were sharply lower. A few gainers, I mean, I should actually call it a few bounces. Infi Beam, I mean, came up very sharply by close. DHFL, I mean, which was down 40%. Closed at about 350, bounced, but nowhere close to where it was at one point in the morning. And TCS was stronger. I mean, it led to a large part of what we saw in the IT index. Lada.
Okay. Well, let's straight away get to our guests and check out what they made of this. First up, Ashwini, what are the charts saying? A quick dipstick survey would reckon that, you know, that people are still panicking. What's your sense?
I don't know what people you are hanging around with, but that is true. Till people are long, till your SIPs are very comfortable and flows are coming in, this won't bottom out, because people need to hurt, they need to give up their merchandise before the market bottoms out. And you know, you can take this rally from anywhere, possibly 8,000. So from 8,000 you did 11,500, 600. Maybe a 1,500 point correction is on the way. So everything is a correction on some time frame. So that way, you know, next target is 10,500. If that goes, maybe 9,800, 10,000. And maybe it needs a revival of the, you know, rate cutting regime to, you know, move back into a bull market. You have to understand the regime has changed. The cost of capital is higher all across the world. So this, you know, vertical runs that were there because of rates, that is going to get taken out completely. And in that case, you know, retail obviously gets hurt. 2017, everybody came in like there was no tomorrow. And now chances are they get bludgeoned. The best way out for them is do a monthly SIP into some ETF. And at some point, you will hit bottom and then you'll have a good price point of entry. You want to do individual stocks and hope that, you know, X will not fall and Y will not fall because they are blue chips. I think you just need to look at the charts of Infosys and TCS when they were going down, Infosys below 900.
Yeah, remember that, Ashwini. Rajat, what about you? Is the bottom far? I mean, Ashwini says just go on doing ETFs and at some point you will hit bottom. Does it look like the bottom is what, 10,750? That's what some technical guys say. Or are you already buying?
Hi, Lata. Well, I think I'm no expert to predict a bottom for this market, but I also think that the segments that have fallen in this market meaningfully are trading at an index level much below than what the index is today reflecting. So this market at every phase keeps surprising us on how polarized it keeps on getting. So you have technology which has hit a new high today, and you have financials which have hit a new low today. I think we, as you rightly coined the show, the fear factor is what is more important today, which is what has led to such a big fall in many of the financials. So the more important question today is that what is driving these stocks down and what do we do with them, because any correction in the market is essentially led by these names right now, is what we have seen over the last few days.
Okay. You buying anything, Deepak?
Not really at this point of time. I think just conserving our cash, waiting for the market to settle down. And you want this whole kind of fear to out of the system, at least as far as the NBFC funding is concerned, and some sort of stability in the debt market, so to speak. So till that point, I think just better to wait and watch. We have seen such corrections, such brutal corrections in the past, and they tend to pass over in a few weeks or so.
Before we just move on, Rajat, to that point about fear, what will stem this fear according to you? Will it just run its own course, or it needs an intervention?
So Prashant, I just wanted to brief on 2 points. If you look at the real rate of interest today, and just for simplicity, I am guessing that we are not changing any of the metrics here. The current inflation and the 10-year G-Sec, we have a positive real interest rate of almost close to 4% right now. This is as high as we have seen for a very, very long time now, right? This kind of a real interest rate does not warrant any further increase in interest rates. I think the problem has been more on the liquidity front right now. And this has been a classic phase over the last few days, where your September phenomena of advanced tax collections, your dollar, your rupee support, and plus some rollover that may have been happening in the debt market, all just coincided together. I think it's just a matter of time that some of these things will just settle on their own, because we are not fearful of rates shooting up. We are only seeing a liquidity environment being tight, which has created some kind of a panic in the last few days into the market. And we think that normally these things don't last long. And the government, along with the regulatory agencies, have indicated a very, very strong indication that they are going to step in, and I think you will see them taking steps very soon. So things will fall back on their own, right? And then probably, going forward, we'll realize that some of these stocks probably traded too cheap for us to buy them.
Okay. Well, actually, that is our second headline, Rajat, to stay on. The second headline is exactly that. The Reserve Bank of India and the SEBI's efforts to talk up the markets went in vain. The NBFCs continue to fall as the stocks saw severe selling pressure. Fears of higher cost of funds continue to grip the sector. Well, like I said before, there were no trades in the debt market, but usually CPs are not traded a great deal. CPs are traded somewhat. Corporate bonds are hardly ever traded. They are bought and held to maturity. There are few and far between trades. But now there is a fear of buying. And that is what is pushing yields higher. At what particular yield people will be prepared to buy, we don't know. But if that is known, then perhaps the markets will fall further, fearing that if NBFCs, have to pay such a high, double digits for the cost of money, then they will not grow at the 30-40% that they are showing, and therefore giving them a price to book of 3, 4 and 5 is uncalled for. So it is this fear that is continuing to bedevil the NBFC stocks. The fact that they were priced for a 30% growth, and they were priced for 3, 4 and 5 times book, and therefore they have to come down. And mind you, I mean, Bajaj Finance has fallen how much? It's trading at 52-week lows, is it?
The high was 2,900. It's at about, what, 22 something, right? 2260 or so.
Okay, so something like a 20% fall. And it is still trading at 7 times book. So, things are expensive. The point is, until now, one thought they will deliver growth, and now you're wondering whether they will. So, Rajat, on that issue to you, before we let you go, will you start buying NBFCs now? Any NBFCs?
So, I just wanted to brief 2 points on this. First, most of these NBFCs benefited when they migrated to borrow money from the CP or the NCD market as interest rates started falling down, and banks were not lowering the rate in that same magnitude. So for NBFCs, the arbitrage to borrow money directly from the market was far cheaper. Before that, they used to borrow money from the banks for lending to their segments. I think we will see that process now returning back slowly, but this transition will take some time. And the second more important point is, do we have underlying demand for the products that these NBFCs have been funding for, whether be it a Maruti car, whether be it a real estate house, or whether be it a white capital goods or other segments that Bajaj Finance, like of companies are funding. if there is a demand for those products and the funding comes back instead of market through banks, right? I think we will have to moderate the growth rate. But I agree to the core point of yours that the valuation re-rating that we saw in the NBFCs was a function of easy liquidity. That may not be the scenario. So the markets, in their own wisdom, is readjusting the multiples for these stocks.
Okay.
Fair enough. Rajat, we'll leave it there. Get well soon. Appreciate you joining in. And thanks very much indeed for joining us today on this show. Okay, let's take some questions, actually, on these names. So Ajay Kumar has written in to us from Kolkata. His question is on Bajaj Finserv. He's been holding 20 shares of the company, Bajaj Finserv. His cost is 5,000 rupees a share. Been holding them for the last 2 years. Wants to know if he should hold or sell. Ashwini, what would you tell him?
The trouble is that today maybe Bajaj Finserv price looks low, but even 5,000 can come in, because the way these guys went up like no tomorrow, a 50% correction from 7,500 is 3,700. Now the point is, what is long term? Does it mean you take a 40% hit and don't do anything? That is called long term. According to me, if you can clearly see things are changing, the thesis that you bought on, that is changing, you need to protect your capital. If I were him, I would take it off. Let's see how far Bajaj Finance or Finserv can fall. We can buy back. This regime will not change tomorrow. Maybe you'll have a couple of years of, rates going up. And couple of years is a long time for even the best of long-term investors.
Fair point, Ashwini. What would you say, Dipan?
Switch from Bajaj Finserv to its subsidiary Bajaj Finance. I think that's the growth engine of Bajaj Finserv per se, and it's corrected significantly. And we still believe that Bajaj Finance can deliver that 25-30% minimum type of earnings growth rate. And being a blue chip company and of course the brand and the backing of the Bajaj group, they shouldn't have much of a problem in raising funds. Some of the NBFCs may get hit, and in fact the competition to that extent may go down in the NBFC space for a player like Bajaj Finance. So I think this is the time to tank up on the solid blue chip NBFC companies which can continue their growth momentum and are now available at 25-30% lower than what their peak prices were.
Okay, so Bajaj Finance clearly is. Well, that's the advice, Ajay, if you're listening. We have to take a break on that note. But let's leave you with an opinion we got from Andrew Holland of Avendus and from JP Morgan's Mixo Das on the way the markets have trended. We are back in a jiffy.
Not a sector to rush in because valuations have become so attractive at the moment. So, unfortunately, we just have to sit there because the rumours are too much, and you get whipsawed too as we saw on Friday. So, just sit back and watch a little bit. And see what entry points you want to go in. But those are, the quality NBFCs are the ones where we'll be focusing our minds in terms of what the entry points are.
This is directly a result of the currency depreciation, right? So, which is very positive for the exporting sectors, but not so positive for the financial sector. So that's as long as the currency continues to be under pressure, this portfolio rotation makes sense. Higher cost of funding is definitely weighing on some of the NBFCs in the near term. But again, if you look at global investors, bond investors, Indian bonds from a long-term perspective, again, remain attractive for them. So I wouldn't expect this situation to last for an extended period of time.
You're with us here on Markets Today. We're calling it Markets Today Fear Factor because there was fear which was all pervasive in the market. Taking off from Friday, the Nifty sold off another 170 points by close. We got through two other stories, the big stories, which kind of defined the day, and this is the third one now. Weak macros continue to weigh on Dalal Street. Crude oil prices surged on the back of restricted Iranian imports and a tight global supply situation. Brent oil prices crossed the $80 mark, while NYMEX is trading above $72 a barrel now. Oil sensitives, of course, like BPCL, HPCL, IOC, aviation companies all ended the day in the red. Manisha is here to quickly decode this uptick that we've seen in oil. Manisha, what's your sense?
Well, it's a 4-year highs on the crude oil prices, and whichever side you look, the fundamentals are quite strong. Iran sanctions is what you talked about, and the markets are looking at supply tightness because of that. And there are forecasts that 1.5 to 2 million barrels per day could be knocked off once we enter the month of November. And the kind of statements we have heard from Saudi Arabia and Russia saying that all their focus is really on compliance. They are not looking to increase additional output right now, and also that they are expecting demand to be higher in the month of October. All of that was quite on the stronger side. And then you have the US crude inventories, which are at the lowest since 2015. There are expectations that we would be touching 100 million per barrel of a demand in the global markets for the first time ever. So while the demand scenario seems strong, the supply concerns are many. And then, of course, you also have supply disruptions coming in from Venezuela, Libya, Nigeria, etc. So the fundamentals are positive wherever you look. And then you have JP Morgan, Trafigura, Mercuria, all of them coming out with reports saying that $90 to $100 on the higher side is where they see crude oil prices in the early 2019. All of that seems quite bullish on the crude oil prices.
Okay, Manisha, give us a scary scenario and scare us more. But usually when all these brokerages speak about these scary scenarios, crude has a tendency to turn off. Well, but before I go for more answers to my guests, let me take the fifth headline because it's related. The fourth headline, the Indian rupee opened 27 pice lower at 72.47 against the American dollar today. It continued to weaken through the day on strong dollar demand. Tech stocks, of course, turned out to be the top performer and perhaps the only sector which ended up in the green. The leaders were TCS, Infosys and HCL Tech. Dipan, you're a long-time hater of IT companies. I think for the last 2 years you hated them.
Yeah, and we got it wrong.
So, but first you were, I mean, initially when you
I've been
went
I've patronized these stocks for many
yes, I remember.
years.
All through 2002.
Yeah, so we got that particular cycle up right, but clearly I think last 1 year our call on IT has been wrong, and IT stocks have doubled 60-70% higher. But I still maintain this is a nice trading bounce. So if a software company has doubled in 1 year, I don't think it can double over the next 3 years also, because there's no visibility of earnings, and we all know the fundamentals are deteriorating. Base effect is a major factor. You just cannot keep on growing at those sizes the way they have been in the past. So I would say that this is not the point to enter into IT companies. You've already missed the bus.
All right, last of that.
Okay, let's move on to the last one. Auto stocks began the week on the wrong foot. I mean, the market began the week on the wrong foot. Most of them suffered major losses in trade. Nifty Auto Index ended the day close to 4% in the red, led by large stocks like Mahindra and Mahindra, Motherson Sumi. Eicher Motors was also one of the big losers, down over 6% today. Well, there are a couple of factors leading to this. Expensive fuel prices, as we highlighted earlier. You've got to pay 90 rupees plus for a litre of petrol in Mumbai, high EMIs and a higher cost of insurance. Well, the higher cost of insurance is the latest addition to the woes which auto companies are facing. Yash is standing by with a very brief take on how much extra will buyers of new vehicles will have to shell out for insurance now. Yash.
Well, Prashant, let me quickly put things in context. The insurance regulator has made two important changes under the personal accident side of the motor insurance. They've raised the minimum insurance cover from the current 1 lakh for two-wheelers and 1.5 lakh for private cars, directly taking it to 15 lakh. Also, corresponding to that increase in the insurance cover, they've increased the premium to 750 rupees for both categories of vehicles. And of course, do remember that this amount has to be paid upfront 3 years for private cars and 5 years for two-wheelers. So that essentially calculation boils down to about 750 into 3 for private cars, which is 2,250, and 750 into 5 for two-wheelers, which is 3,750 rupees upfront. Now, if you just put this in context of two-wheelers, this will be a great negative impact as far as their sales is concerned, because this cost of 3,750 directly implies a 8 to 10% jump as far as the purchase price of these two-wheelers are concerned. As far as insurance companies are concerned, they also have a negative impact coming from this thing, because the ticket size of the claim also increases for them.
Okay. Thank you very much for that, Yash. That's another reason not to buy vehicles, it appears. Well, a question on that.
I think we missed out the biggest factor in Mumbai is essentially traffic.
Yeah, parking.
I mean,
okay. And perhaps the ease of getting Ola. Well, there's a question from Raj Kumar from Andhra Pradesh. He has a question on Mahindra & Mahindra. Says he has been holding 750 shares of the company, purchased on an average at 887 rupees. He's been holding it for the last 6 months, and he wants to know whether he should hold or sell, Deepan.
I think remain invested in Mahindra & Mahindra. Both the farm equipment and the auto businesses are doing well, firing on both cylinders. We have had a decent monsoon. I think M&M should come out with good quarterly numbers going forward as well, and reasonable valuation. Our view on auto is positive, so I remain invested in M&M at these levels.
Okay. Well, that's a positive note on which we have to wrap up this edition of Markets Today, The Fear Factor. Thank you, Ashwini, Deepan and Rajat for joining us, and thank you all for watching.